Good morning to you, and thank you so
Thank you.
much for joining us this morning. Tell us a little bit about you and what your company is and what you do.
Well, it's Billy O'Dwyer, and the company is Credit Space, and we are credit management consulting and training company, which is a big mouthful. But in effect, what it means is we work with businesses who give credit to their clients, and we work with them in identifying who they should give credit to, how they should run that process, and then help them with how that they should be doing their collections as well. And then on the training side, we provide training to their staff and to the managers on how to do the job.
Okay. And I think it's a really important topic, who you give
Yeah.
credit to. And I suppose it, a lot of small providers might say, well, I'm not big enough to give credit to somebody, and you stick to whatever terms somebody else is on. Is that what you should do, or should you always ask or do some sort of a check on companies that you work with?
Well, you don't actually have to offer credit to anybody. I
Mm,
dealt with a business a couple of years ago, a startup who came and were referred to me to look at how they should set up their credit process. And the first question is, why are you giving credit?
yeah,
Um, and he couldn't work out why he was giving credit. So we worked out a way that he didn't need to. And he walked away after an hour and a half of a consultation and rang me 3 weeks later to say I've just closed 4 deals. Nobody queried it. I asked for payment and I was given it, and it's great.
mm,
But if you are giving credit, and if you're in an industry where you have to give credit, then yes, you do need to check the background of the companies that you're dealing with. And we'll go through a few points during the
mm,
presentation on that. But the very, very basic is just to make sure that the person asking for credit actually that they exist, that the company does exist, and it is there.
yeah,
Uh, a number of times I've come across ones. One particular one that stands out for a drinks company, and they had a new brand, and they were delighted to get an order from somebody for this new product, and it was 2 pallets of product, and they set up credit, they did everything, and the product was delivered, and then they couldn't get in touch with them. And eventually, when they took to they used an outsourced delivery company, and when they talked to the driver, he dropped it off at the back of a disused um, building, which was supposed to be the head office of this new company. So they just lost 2 pallet loads of product because they
yeah.
didn't do basic checks.
Wow, wow,
Yeah,
that's amazing. Wow, I haven't
yeah,
heard anything like that before.
yeah. It's just
Yeah,
simple things. Just make sure they actually exist.
yeah, yeah. Okay, look, I don't want to ruin your presentation by asking
Okay.
you all the questions you're going to answer, but tell us a little bit about you. How did you get into the credit space in the first place? Has it been something you've already always done, or?
No, I previously was in sales. I was in
Okay,
an IT company. I was a sales manager in an IT company with, I think there was 14 sales staff in the sales room,
yeah,
and we were doing very well. But it actually been sort of a turnaround position. They weren't doing very well when I went in, and we turned things around. We got it going. It was all great. We had a very good commission structure to incentivize the salespeople, but the problem there was we only got that commission when the client paid, and the account staff at the time weren't that pushed with collecting because the money did come in. It was good times. Money did come in, but they
mm,
weren't all that pushed about when it came in because it didn't
okay,
affect them at all. So we started taking back some of that work and saying, well, we'll if it hasn't come in 30 days, we'll push it. We'll do it because it meant we got paid.
yeah,
Um, and then a firm came in looking to try and sell collection services to the business. I was involved in the meeting, and when they were saying, "Well, we'll do this," so we're already doing that.
mm,
And about 3 weeks later, their CEO came back to me directly and asked if I'd ever thought of changing jobs. So that's where it all changed.
wow, that's great. That
Yeah.
really shows how your I suppose your business experience can take you onto different paths because people excel in different areas, and the one
Well,
that you're in right now might not necessarily be the one that you're going to excel at.
Well, skills pass across different areas, and
Mm,
sales skills can be used in the collections area and the other way around as well. There's a lot of
mm,
psychology,
mm.
and people talk about closing the deal in sales, and it's the same with collections. You've got to ask for the money, you've got to ask for the sale. You
Yeah.
know, there's a lot of similarities, and the targets and everything else. So yeah, it doesn't matter what area you're in. You've got skills that are transferable.
Very interesting. Okay, oh, I'm keeping to our time schedule, so I'm going to
Okay,
start your presentation, okay?
no problem.
Um, I will, you just let me know when to turn the page for you. Oh, let me
Yeah.
stop that one. So, I, let me just bring it up.
I think on a very simple basis, the heading is on the first slide, which is
Yeah,
fixing your Corona cash flow problem. And um, this is nobody realized that it was going to be a pandemic. Nobody could foresee something like this happening.
mm,
It's the unforeseeable. And I was talking to somebody who is running another webinar relating to disaster recovery, and businesses that have, small businesses would never think of having a disaster recovery plan.
yeah,
But now, most of the people signing up for that and, talking to them are small businesses who realize, well, hold on, you know, this is a disaster. What if my property burnt down, or what if such and such happened? And kind of the possibility that there'd be a second infection run on this, and that everything might get shut down again, or another virus might come out. They're starting to realize, what the problem is. But specifically for ourselves, the if you're closed, there's no cash moving.
yeah,
Nothing is happening, and cash is not just king. Cash is the lifeblood of your business. Without
mm,
cash, you're gone. So that's really what we're looking at on the presentation today, is what you can do about that cash flow problem that has been caused. Um, and is the slide are the slides
yeah,
there?
yeah.
Okay.
Sorry, I'll just start them now. Hold on now, one tick. There we go. I'll take the controls for you. So just
Yeah.
let me know when you want to go next page. Will I
Yeah.
go on to the next page? Yeah.
Go on to the next one.
There we go.
So in effect, what we're looking at is what's the problem? And well, the problem is the lack of cash. It's just not flowing. It's just not moving. Some businesses have managed to stay open, and some have managed to use that very cliched word of pivot. Everybody knows those restaurants that you used to go to that now do delivery, which is an example of a minor pivot. But other businesses have pivoted more. Some of the manufacturers who have stopped manufacturing the goods they used to make and are now making PPE equipment.
Yeah.
That's a significant pivot, but it meant that they have been able to reopen, and that they've been able to actually produce some goods and keep selling. But the problem is on a number of levels. I have it listed down here. It's you, your clients, and their clients. So the problem doesn't sit in just one area. If you have a business where you could continue to trade, and you can continue to trade from your home safely, and all of your staff can continue to work safely, well, that's great. But maybe the clients that you deal with, they're not in the same situation. So, and if the clients are into the situation where they're able to trade, maybe their clients are. So it's a sort of a trickle down effect, and that's where all of those problems occur. An example I give might be solicitors firms, or accountants firms. I know a lot of them are very quiet at the moment, have furloughed staff, have closed offices, laid off staff. They've nothing happening at the moment. And the thing is, they can work from home, and they can just everyone can be working remotely. but their clients aren't open. And if their clients aren't open and nothing is happening, and the courts are mostly closed as well, so they can't work. There's no business coming in. And so that's where the problem is occurring. And if we flick onto the next slide, then what I've identified is just a couple of points to run through. And as we said earlier, if you've got any questions on any of these, just pop them through while we're talking, or you can wait and we can go back over them later. I've kind of got 6 points. Now, we could be here discussing all of these 6 points or multiple other points that I thought about including. Individually, we could discuss them for a whole day. But I thought these ones were important right now in the circumstances that we're in. The first one there is credit risk. We've already touched on this already. Some small businesses and even some large businesses actually don't do proper credit checks on their clients. They have a sign-up form. So I have seen the situation. You have a sign-up form and the salesperson actually fills it in and signs it off and passes it over to the credit department in the expectation that it's just the passing over of information to set up the client so that you can sell to them. Where in reality, what it should be is, here's this information that allows us to go and check on that business to make sure that we shouldn't be giving them credit. Are they credit worthy? Do they have lots of judgments against them? Is there some other difficulty in the background? And with the situation we've got at the moment, the additional difficulty it brings is that a lot of the information that people would have relied on before is not entirely worthless, but it doesn't have the same value. So I personally would not rely on a credit rating from a Dun & Bradstreet, Experian, VisionNet, or any of those groups. But some businesses do. And that information and that credit rating is based on the data that they have collected, most of which is already a year out of date because it's from your accounts which you have posted into the CRO. So it's out of date information, but they do have good systems for predicting where changes might go. But right now, somebody who could be an really good rating before this happened could be a complete disaster afterwards. So we have to be a little bit cleverer in how we look at credit risk. We have to be cleverer at how we decide who to give credit to. And if you have 100 clients, you've got to go back through those clients and you've got to look at them and calculate which of these people can I still do business with on the same terms. I would never say to drop a client, but you may have to change the terms that you do business with, with some of your clients back to cash or shorter terms or a shorter or lower credit rate. And you just have to be careful. It's your money. You're putting it at risk. You're in effect giving them a loan, and you just need to be a little bit more careful. The next point kind of connects in with that one, and I just have the initials down, KYC, which is know your client. And it's a small point, but it connects with the first point. When you are taking on a new client and they filled out a form and they've given you the details, you need to go and check that, as we said before, that company actually exists, that they've given you the correct details. And if you've been told that you're dealing with ABC Tiling, but you go and you do a check and find that there's no such company name or business name as ABC Tiling, but there is a ABC Tiling Services Limited, then you can go back and just confirm that those details are correct. Because you can't do a proper credit check if you don't know that you're checking the right business. And also, if you are invoicing the wrong entity name, the wrong business name, technically speaking, they don't have to pay. So you need to be careful in on that area. But right now as well, from a know your client basis, you should always be in touch with your clients on a regular basis anyway and checking if anything has changed. But right now, more could have changed than you would have realized. So I cannot remember the exact the exact percentages, but a significant percentage of your database that you would have, client database, becomes unusable over the period of a year. It degrades and it has to be updated. Phone numbers change as address changes, contact people change, and if you leave it and you don't keep it up to date, you're going to have a bit of a problem. So what you need to be looking at now is a small project to check with your clients as you're dealing with them, as you're contacting them, and you can get your salespeople, or you can do it yourself, or you can work it in as part of your collections process. That as you're going to invoice somebody, you just double check that all of these contact details are still correct. Because I've dealt with two companies recently who, because of this situation, have given up the offices that they were in before and are moving to smaller offices, or are now going to be working from home. So that's important information, because you have to have a correct address for them, and also people may step back from businesses now and move away. So you've got to check that you're going to have the correct contact name. Does all that make sense?
It does. Yeah,
Yeah.
absolutely. I just have a question here from David, Billy. Do you have a view on political slash reputational impact of tightening credit terms on consumers?
Sorry, repeat that again. Just the
Do you,
political.
do you have a view on political or reputational impact of tightening credit terms on consumers?
Um, yeah. Well, yeah. It there can be an issue if you tighten the credit terms with consumers. You're potentially saying to somebody that I think you're not a good credit risk. So like everything within the credit area, it has to be handled correctly and with empathy. It's not something that I would suggest somebody does in a blanket, as a blanket thing. That, okay, this group of clients of 150 or 200 consumers, we are now going to degrade their credit status and change them, and just send them a letter. That's not something I would ever suggest doing, and it's also not something that I would suggest is ever made public. Um, it's something that needs to be handled carefully. I don't know if that fully answers the question. It's a pretty big question, actually.
Yeah. David, if that doesn't answer your question, if you click on offers at the moment, there's a link to register for a consultation with Billy. So he could
Yeah,
take it up with him offline, direct, and
yeah.
go into
It,
more
it's a
detail. Mm,
it's a question that you could come at from a couple of different angles. So it really depends on the angle that you're
mm.
coming from. Um, and I'd be happy to even just take a phone call afterwards about it. There's no problem with that.
Great.
Um, the next point, if we move along, is on automation, and these are some of these are things you can be doing now. You don't have to wait if you're closed down. You don't have to wait until you open up again. You can be preparing, and a lot of these are things that I would be suggesting companies do anyway. You always are looking on the automation. You want to automate as much as you can of the process. Um, the most valuable asset that you have within your collections environment are your collectors, the people involved in the process. And you want those people, and you want those that I hate to refer to people as assets, but you want that asset. You want to get the most out of it. So you want the person working on the highest value work that's possible, and that's being in touch with the clients that need a phone call, that need a discussion. And the difficulty is that a lot of time, people in collections spend a lot of time doing manual work that they don't need to be doing. So sending out reminder emails, writing letters to send to people as reminders, or going through to check that payments have arrived in, trying to go through diary, just general manual work. and that can be automated. There
Mm.
are very cost-effective software solutions out there. There's an Irish company based down in Sandymount called XRS that have a good solution. There's a number of them, and they all integrate with your accounts packages. And in effect, what it is, it's like a sales CRM system, but for your collections. And they will allow for a certain level of automation.
Mm.
So you set the rules, and as long as the information is in there correct, you can set the rules that you want an email to go out to anybody once they have hit 30 days, if 30 days are your credit terms, to send them a reminder. And then you can set another reminder and another reminder. So this goes into what people would refer as your collection path or your dunning cycle. And this is how often I want to contact these people. This is when I want to contact them. And this is how I'm going to contact them. And you will find that if somebody is contacted, if you've got 100 clients and you send out 100 reminder letters or emails, a large percentage of people will pay once they've received that. It's a nice reminder. They forgot to send the payment to you, or maybe they only pay when they receive reminders, but it will get a significant response. And when you send out the next one, that will also get a response. But you don't want to be manually doing that.
Mm.
Because if that's just taking up so much time. So I would suggest to anybody out there, if you want to talk to me about it, that's great. That's what I'm here for. But look at your accounts package. Please don't use your accounts package or printing out an age debt report as how you manage your collections. There are very cost-effective solutions out there that will run your collections for you. And it will do it to the point where it will just give you a short list of people that you may need to ring at the end of a week. So depending on your numbers, for an SME, for a sole trader with enough clients that need chasing, there are packages there. The more you can automate, the better, because as I said, it means that then you're freeing up that time to do something of a higher value. And right now, because of the difficulties, and feeding back to the previous points about changes in the credit profile of some of your clients, you may need to spend a lot more time speaking with individual clients. You may have to negotiate new credit terms and new ways of dealing, and you may have to organize payment plans, and they're going to become more regular conversations, and they take time. So you want to free up that time for that credit controller to be able to do that. Does that make sense?
Yeah, absolutely.
And also, nobody really actually likes sending those emails, and nobody likes doing all of that work. So as a sole trader, as a small business, just automate whatever you can. Just make it easier so you can focus on the higher value work.
Yeah, I think there's a fear of making those phone calls and putting somebody under pressure to pay that might not have it. But then
Yeah,
there's always those clients that you have, and it's not the first time, and it's not the second time, and it's not the third time, and
yeah.
it's not the fourth time, and you are always chasing the same people for payment. And then do you just make the decision to either A, not work with that person again, or B, money up front, I suppose.
Um, well, I think you've covered a couple of points there, and I would never suggest that you're putting pressure on and it's actually covered in the next point in training. Some of the training that I provide looks at how you speak to people and how you call them and what you're saying. And one of the really important points in there is empathy. And a lot of people have this idea that when they're ringing, it's I've forgotten the guy's name, but there's a number of examples, nearly from the Goodfellas or whatever. Give me the money. It's not like that. It can't be like that. If you're shouting at somebody and you're threatening them and you're give me the money, you're not going to have a relationship with them. They're not going to want to deal with you, and you may have short-term success with them paying you, but they're never going to want to take your phone call again. So it's about empathy, and it's about ringing them. And I have spoken to a few people as well, and other people in the collections area who are saying that they're being asked not to ring people now because they don't want to put pressure on them. But some of those people already have pressure on them because they realize that they owe this money.
Yeah.
They know they owe lots of money, and in a way you can take some of that pressure off them because you can ring and say, well, you can ask for the money, and some businesses I still have good cash flow and are working away, and they will pay you. If you don't pick up the phone and ring them, they may decide, and other non-ethical businesses are just not paying people until they're pushed. So you do have to pick it up and you have to ring them, but it's how you ring and how you ask, and using empathy to identify those clients who say they can't pay, and agreeing when you will ring them back if you can do that, or coming to a different agreement as to how it will be paid, or it will be spread over a period of time, or whatever is available to you in relation to that. But if you're not aware of that information, and then in a couple of weeks' time you decide, okay, we're back open again, let's start ringing everybody, you're flying blind.
Mm.
You don't have information. Where if you're on now, you can have that information, for the future, and you can understand where all your clients are and who the problem, difficult situations are going to be,
Mm.
and also you can be collecting money now. Don't wait. It's better off in your bank account than it is in theirs. And if they can afford to pay, ask for it now.
Mm.
And that, as I said, it feeds into the training point. There is extra time now. So look at training. Yeah, the difficulty with the whole credit area is, if I had two salespeople going in selling, training, one selling credit training and the other one selling sales training. The guy selling the sales training is going to get a lot more meetings with businesses than the guy selling credit training, and that's just how it is. People will spend a lot more on selling, um, and on the training for selling than they will on the training for collections. But
Yeah.
because of the difficulties and everything that's happened now, it has increased the profile of the collections department. It's now critical. It's all about the cash flow.
Mm.
If the money isn't flowing, the business isn't open, and people are often just they're employed as a collector, and they're brought in. They're saying, well, there's your desk, there's your computer, here's the accounts package, there's your phone, and okay, we'll see you later. Off you go. Or maybe that's a worst case scenario. They're shown how to use the system. They're shown how to use the accounts package. They're explained a little bit about the company, but they're not given any training on how to make calls. They're not given any training on what to do in different circumstances if you come across different problems, and they just have to learn on the job, and that's a terrible risk. There is that quote of because people are scared to spend money on training, but that quote of the CEO kind of asking, well, what happens if we train these people and they leave, and the CFO replies, well, what happens if we don't train them and they stay? So you want trained, qualified people who are able to make those calls, and that's something that we really focus on. As part of what I've been doing over the last while, I've in partnership with a partner, we've set up a new institute for credit in Ireland called CMII, the Credit Management Institute of Ireland, and you can find it at cmii.ie. And under the training heading, we have the Credit Essentials course, which is specifically designed and is accredited by the Institute for those people on the front line, for the people that will be in touch with clients on a daily basis and who are making the calls. And it's a very practical course. It's about everything that we've mentioned before about what you should know about doing credit checks, what you should know about KYC, and how you should set yourself up personally for making those calls. And then it goes through a step-by-step process in when you're making a call, what you should do. So even within this this area, we can give a few tips on that. So if you are making a phone call, I would always suggest that beforehand you write down the points of how you're going to do with the call, what you're going to, the steps that you're going to do within the call, including introducing yourself and asking for payment and dealing with issues and how you deal with them, and write that down and have it next to you so you can kind of mark off those points as you go through them, so that if you end up in a complicated call, that you don't lose yourself and lose your spot. And an example of that would be, and I'm sure everyone has done it. Have you gone to the shops and to buy bread, and you've got down to the shops, you've gone in, you've seen something else, you picked up something else, and you picked up a few different things. You've got a bag full of shopping. You arrive home and go, I didn't get the bread. And it's the same within a call, within any call. You have to have the points. This is what I'm ringing about, because you'll get those people that will chat to you for ages and will keep talking, and you don't get a word in edgeways, or they distract you with something else, and you hang up the phone and you realize, God, I never actually asked them for the money.
Yeah.
We discussed the problems that they're having in their business. We discussed our problems. We discussed the whole COVID situation, but I never actually got, that, or they've agreed that they're going to pay, but I never asked them when and how much they're sending me. Or we've kind of agreed something, but I'm really not sure that they said yes to that definitively at the end. Maybe it was just me that was saying yes to it. So there's all of those things that we cover in training. And now is a time where there is a little bit more time, that people can look to do it. We used to do training where there'd be a classroom situation and we'd all be in the classroom to do the training, and it would be a full day's work. Obviously that doesn't work anymore, so we've changed, and it's now done via Zoom, and we can do an hour a day over the week, and it's more concentrated. Each of those hours is more concentrated, but also why I like it even more than the classroom situation is that you get to implement what you're being trained on and come back the next day to ask some questions. Does that make sense?
Absolutely. And just on that training, Billy, is it scheduled at the moment, or can you just go online and book onto it?
You can contact me, and we can look at because some of the training courses that we're doing, we would put people together from of a similar level, or we might.
Yeah, good plan.
So
yeah,
you can contact me and I can schedule it from there.
Yeah, super.
If I left it, I don't want to leave it entirely open for people just to book themselves in, because I just want to make sure of their level of experience and where to put them.
So people get the best benefit out of it.
Yeah, and people will be asking questions. And if you've got, it's better to have 10 people with experience together rather than having 6 people with some experience and 4 people that have never done it before, because you just the classroom will have to move at the pace of the slowest student, if not to be not to be,
no, I know what you mean.
So it'll move people, and it will people get more out of it if we can kind of put the right people together at the time.
Yeah. Okay.
So, but you can get more information on it. I'm adding new information onto my website, creditspace.ie, about at the moment. So, but you'll be able to contact me directly. The next two points. Well, the next one we've kind of touched on slightly already in relation to empathy, and this the vulnerable clients. This is a topic that I actually was thinking about doing as the main topic for this discussion, but I decided to kind of to leave it as a point because it's so big and it's so important. In general, without any COVID or Corona issue, you are always going to come across vulnerable clients. And the problem with just even the term is nobody has a solid definition of what vulnerable client means.
I was going to ask you what it was.
Yeah.
Okay.
Yeah. I've done consulting work for the Department of Finance deeper, for the local authorities. And one thing that we actually did was to write a best practice guide for collections in the public sector.
Okay.
And part of that, well, I say part of it, but it turned into quite a large document, was how to deal with vulnerable clients. And we went across internationally to look at the definition of a vulnerable client. And what we finished up with was looking at a vulnerable client being somebody that you could not expect to manage their affairs at that time. So it covers everything from people with a psychological or a physical impairment, or just under stress at the moment. Just for whatever reason, that person cannot be expected or could not be expected to be able to manage the call or the discussion that you want to have with them at that time. Does that make sense?
Yeah. So is it
Yeah.
related to the business in terms of a company, or the actual individual in terms of a sole trader, I imagine?
Well, if it's the person within a business, it's the person that you're speaking to at the other end of the phone. And if
Okay.
you're talking to ABC Limited, who's a really big company, but the person that you're speaking to extremely stressed, and there's a problem there, well, maybe you need to be, identifying this to that business, to somebody else, another contact in that business, and talking to somebody else about these issues. And I mentioned at the beginning about how if you're stressed, you're not cognitively working at 100%.
Yeah.
30% of your ability is gone. So if you're stressed, and the whole Corona situation, and the fact that businesses and individuals are having cash flow problems, because it's not just a business that has a cash flow problem. If you've lost your job and someone's ringing up looking for payment, that is a cash flow problem. There is no cash; it's not flowing. So people will be stressed, and if somebody is stressed and they can't think straight, then if you want to agree a payment plan with them, they may agree to things that they can't afford just to get you off the phone.
Yeah.
They can't think through it properly, and they may become argumentative. But even on normal times, you are going to be dealing with people who may have a learning difficulty, or whatever, a physical impairment. As I said, there's no sense sending an email or a letter to somebody who who can't read. But it's about working through those processes. And why I'm putting that down here at the moment is just that, because of the stress of these times, you're going to be coming across a lot more vulnerable clients. They may be temporarily vulnerable, as opposed to somebody who is more sort of long term in the class of vulnerable client, and it may be short term stress. But you need to be aware of it, because those people, you need to calm them down. You need to get to a place with them during the call where they are able to think straight, where they are able to negotiate correctly with you, and you need to make them feel at ease that you're not ringing them to threaten them.
Yeah.
And in effect, you're possibly, you're there to help. You're there to take some stress off them. I discussed again back with the training, that the type of collections training that I give is what I would call mediated collections. So you're there to work with that client, and the problem isn't the client. The problem is never the client. The problem is always the unpaid invoice. And if we can get just that one point, through to everybody, it will improve your situation, because then you can have a discussion with your client to say, well, can we discuss this problem, which is this unpaid invoice, and how can we work together? Like, how can we work together to fix this problem?
Yeah.
Does that make
Yeah.
sense?
Yeah, that's a really good way of looking at it. And I actually never
Yeah.
looked at it like that, but it makes a
Yeah.
huge amount of sense.
Yeah,
Yeah.
and I put that out on Twitter a couple of years ago, and somebody replied to me going, "Yeah, no, I understand. I get that, but I do have problem clients." I was like, "Okay, you didn't entirely get it, but it does. If you can,
Yeah.
if you can have that conversation with somebody, now you're reducing the stress level for them, saying, well, let's work out how can we find a solution that's suitable for both of us? What can we do? What can you afford to pay? And in that negotiation as well, I would give another point. If you're agreeing a payment plan with somebody, particularly if you're agreeing one with an individual, um, if you have a little bit of extra leeway yourself on that payment plan, when you've agreed something with them, give them a tiny bit of extra leeway, because they may agree that people are embarrassed to have these discussions, and they're embarrassed to say what they can and cannot afford to pay. And if somebody says, well, I'll clear this 500 debt, and the best, I'm agreeing I'm going to pay, 100 a week to clear it. They
Mm.
may not be able to afford that 100 a week. So if when you've agreed everything, you can go back to them and maybe say, would it be easier on you if we did this at 80 or 75 a week? Would that make more sense for you? You
Yeah.
may find that they take that. Now, most people will take that, but it's about balancing and only offering to those people that you have kind of picked up during the call that you feel, really, you should really offer that to. I might be overcomplicating it there, but you've
No.
got to use a little bit of your own kind of expertise in evaluating the people that
Yeah.
are on the other side, and who's being straight with you and who isn't. And if somebody, again, is a vulnerable client, if somebody is very stressed and is obviously stressed, if they come to an agreement, you need to maybe think, maybe they can't actually meet that. It's better to uh, get a little less from them, where they can pay and they will continue to pay, and they will pay all the way through, rather than receiving that first payment or just receiving an agreement and no payment ever. So because that then makes the next conversation more difficult.
Yeah.
Does all of that make sense?
Absolutely, 100%. And you've changed the way that I'm going to approach things just by that one sentence. That
Yeah,
it's the invoice is the problem and not the client.
yeah.
Just David just made another point here. He said he's interested to hear how a company might assess who is and who isn't vulnerable as a result of COVID-19 and the subsequent financial impacts. But I think, as you said earlier, it's a huge topic and one you were going to run a session on its own. So I
Yes.
think, again, maybe David, if you connect with Billy on that and have a more detailed conversation,
It,
because I'm
it,
conscious of time as well.
yeah, it's extremely it's a very big and it's extremely difficult topic, and yeah, it would depend on the type of clients that you have,
Mm,
and who you're in contact with, um, but yeah, you just have to have everybody who's in touch with the clients has to be trained, and there has to be a process in relation to identifying and dealing with vulnerable clients. And I am working with through the institute with another training body that looks at specific training for that area as well, for dealing with people that are where there's suicidation risks, and that area. So that is something that's going to become more relevant.
yeah.
I'm sorry, I wasn't keeping a track on the time. How much more time have we?
Well, we're a little bit over, but we still have people engaged, I think. So you're
Okay.
okay. We're at a quarter
Um,
to 11 now. Donal has
I,
just mentioned that good vulnerability advice um, applies in
okay.
life generally to check out Bernie Brown on this topic.
Yeah.
I can vouch for Donal and say that this man has done an awful lot of research in philosophy and different ways of looking at things. So I can say that that is probably a very good piece of advice. And
Well,
David said, no worries, makes sense to
if
take it.
yeah, if both of those would like to get in touch later, that'd be great, because
Mm,
even on just having a general discussion about the topic, I love to have discussions with people from different points of view and
okay.
different areas of learning in relation
Yeah.
to it. But the last point just on that on there is recovery finance. And what I think on this is, again, it's another huge topic, but
Mm,
this is about being able to continue in business, and
yeah.
it's slightly outside of the credit area, but also, obviously directly in it as well. So what I steal from is the startup, lean startup. There's a whole area in lean startup, and there's a book in relation to it, and lots of lectures, and you can find stuff on YouTube. But one of the terms in there is called runway, and how much runway do you have, which refers to how long can you continue trading with the money that you have in the bank account. So a startup would say, well, we've just raised a million and our monthly running costs are 100,000. So we've got 10 months of runway. And I think businesses now need to start doing that. You need to print out and depending on how much time you have or how detailed your accounts are, I'd suggest printing out your statements going back a number of months, if not a year, and look at all of your expenses. Nearly like someone doing a personal budget.
Yeah.
Do you need that cup of coffee every day? That cup of coffee is €5. Multiply that by all the days that you get it. 25 a week. And is it only one cup of coffee you're getting? So it's multiplying all of those kind of things, and do it in your business. Have a look. What expenses do I not need to be be involved in? What can I avoid? What can I cut back on? Where can I save? And where can I pivot and bring more money in? And you can write it down as a simple. You don't have to get into complex. Even though it's not particularly common, but into accounting, just take a piece of paper and this is out, this is in. What can I get in, and that's your collections, and what can you go out. But also speak to companies like ourselves or people that through business who have experience in fixing or dealing with complex credit issues, and also speak to your bank. Or again, through us, speak to about invoice finance or credit insurance or a number of those areas where you may have some very good clients, blue chip clients, where you can get what they call, like, say, spot finance. You can sell those individual invoices and get finance in now from those, rather than waiting for the credit terms when they'll eventually pay you. So there are ways of looking at speeding up that cash flow and helping you to stay in business long enough to be able to recover. I think that's kind of the key one about the recovery financing. Really, what do I need to keep the doors open, and how can I get that?
Yeah.
And if you're doing a cash flow analysis of any sort, then they can get a bit complicated, but do a simple cash. This is the amount that's in the bank every day. This is the amount that I owe. This is what's owed. Some simple, very, very simple figures that work for you, but do it every day.
And there's a lot of business out there at the moment, especially in the small retail or hospitality outlets, who you might not be surprised that they don't actually have a good grasp of their finances anyway. And now they're going to have to make the decisions of, can they survive? Can they stay open? How long do they have to recover? And it's where they need an awful lot of help with the finances and I suppose.
But funny enough, I actually have specific experience in that area, because my family comes from a pub and restaurant background, going back a couple of generations. I'm the one that skipped out of it. But my father had no accountancy background, and he had one of those huge, big, hard ledgers.
The old ledgers.
The old ledgers with independent sheets that you could click into it. But at any time, he taught himself what worked for him. And at any time, he could draw a line, he could tot up, and he knew exactly what he had cash wise. And that's what businesses need to do. And it's the same for a restaurant. It's about reducing waste. He used to give bonuses to head chefs on the basis of reducing waste. So it's all of those things. But it really, as I said, it's about those hard decisions that you'll have to make, and about what financing you can access, or what savings you can make, so that you can keep the doors open, so you can actually get to a point of recovering. A lot of those shops, restaurants, cafes, businesses, solicitors, accountants, there's going to be quite a few that just are not going to be able to open again, and the ones that are going to survive are the ones that are tackling this now.
And looking at readdressing their finance models. or
Yes.
their business models. Yeah.
Yeah. And potentially a complete pivot. We mentioned at the beginning about, where I came from, moving from sales and into collections. You know, large businesses like Mercedes were making cars, and they stopped making cars and are making ventilators. Just because if you've got all of that expertise, you can make different things. And you know, I wouldn't be surprised if a few firms who were in one industry before, if they've pivoted and they don't pivot back.
Mm.
So yeah, the next slide that you have. Just some offers. As I mentioned, we can do a free consultation for a number of people, and for the next, you can change that. We intended doing this this a few weeks ago.
Mm.
So I had April and May in as the months where I would give a discount
Oh
on
yeah.
the consulting as well. So we can call it May and June now.
Okay.
And also the Credit Essentials course, doing a €50 discount per student, again through May and June. So it will actually, for where there's a class, and we take a maximum of 10 people. Sometimes the classes are a good bit smaller because I feel that just the level of experience, as I said, it just makes sense to have a smaller class.
Mm.
But we take a maximum of 10, and it's
Mm.
done by Zoom. And including that discount, it comes in at €100. All of that's ex VAT, but
Great.
€100 per
Yeah.
student.
Okay.
Okay.
I think it's a great idea. It's something I'll probably be looking at going on myself, to be honest,
Okay.
because it's just so
I'll do you a
relevant at the
special discount.
moment. Mhm. Oh, thanks.
I'll do you a special discount.
It's just so relevant, and
Yes.
even the points that you made today, it's how you look at things, how you approach things. It makes a huge difference into the end result of getting paid and managing your credit anyway. So I think it's something that everybody could benefit from, whether you need it directly right now or not. You might need it at some stage in the future.
Yeah.
Mm. I'll just come on back to the chat there. David seconded Donald's endorsement of, is it Brenny Brown? Well worth a read or view of the TED Talks. So that's great to know.
Yeah.
Thank you, Billy and Circa. Really well delivered. Best of luck and catch up. Thank you very much, Michael. I know you were interested in coming to this. This is our third attempt for this particular
Okay.
webinar. So great. Listen, Billy, have you any final comments before we clock off? I know we've taken up a lot more time than
Well,
we
I
anticipated.
would just sort of say that I hope people got something out of it. All of these topics, all of the headings, and I said there's many more. Any individual headings we could be talking all day about. But if people have a specific area of interest, or if they know, clients or friends whose business where there's a particularly difficulty, please get in touch. Even if it's a situation where I can chat to them for free for half an hour or whatever, that
Yeah.
will help them out. I'm happy to do that. The contact details are there. The bottom address that's there, cmii.ie, is for the institute. And if you want to go on and look there, you can actually join the institute for free as an
Mm.
individual or a small business.
Okay.
There'll never be a charge. You'll only get charged when you become more experienced and move up
Yeah.
as a professional credit person, or if you want to access additional supports as a business. But you can join in there and be part of a community where you can access support. And there's a LinkedIn group where you can as a member, you can post questions and hopefully get help.
Great. That sounds fantastic. I might sign up there myself.
Right?
I just go back to chat. David, you make me smile. David says, thank you. Particularly useful reminder that there are no problem clients unless
Yes.
they're fraudsters, perhaps. Yeah,
Well, if they're a fraudster,
I thought that was a very good point as
yeah.
well. I have to say, yeah.
If they're a fraudster, that identifies a problem with your KYC and your credit risk process at the beginning.
Yeah, that's very true. Very true. Listen, I think we need to leave it there,
No
everybody.
problem.
I want to say
Brilliant.
thank you, Billy. Thank you so much for your time. I really appreciate it, and it's great to get this completed. I know we were trying to get you on for a while. Thank you very much, everybody, for your support and for attending this webinar. I know we have gone over to nearly an hour, and everybody is still on the call, so we really appreciate your time. The replay links will be available if you want to, you'll be able to access them later on today. And we will end it there. So thank you very much, everybody. Enjoy the sunshine and stay safe.
Brilliant. Thanks very much.